Hello again, this is Andrew Westhof with Homes Mortgage Lending, and this is your interest rate update for Thursday, September 8, 2022. So good news, interest rates came down a little bit today. They're still a bit higher than we'd like to see them, but we are hoping that as the economy continues to cool and inflation hopefully will start to level off and hopefully decline, we'll start to see rates fall even further. So one thing I wanted to note right now, that it's expected that on September 21st, when the Fed meets, they're going to raise the Fed free rate 0.75%. The Fed free rate is not the mortgage interest rate. That's the rate that the Fed lends to other banks and financial institutions. It does correlate with mortgage interest rates, but when we know or we expect what the Fed is going to do, and it's all but a certainty that they're going to raise it 0.75%, barring anything crazy happening in the economy between now and then, that's already priced into the market. So you don't have to worry about trying to get a home under contract and getting an interest rate locked in before September 21st, unless something happens in the economy where we think that the Fed's going to raise it more. That won't affect interest rates any further. It's already priced in. So without further ado, let's take a look at what current interest rates are. So for our scenario, $250,000 purchase price with 20% down, so a $200,000 loan amount with a 740 or higher FICO score, 1 unit single family primary residence on a 30-day lock. Today we're at 5.984% at Homes Mortgage Lending, so just under 6% with a 6.147% APR. So let's take a look at what that looks like. So again, here's the details of the loan. 5.984 is the interest rate, 6.147 is the APR. And then we'll scroll down to principal and interest is 1197.04. We're estimating rough estimates for homeowners insurance $900 a year or $75 per month, and rough estimate for property tax is $6,000 for the year or $500 per month, which gets us a total payment of $1772.04. So a little math here, because I'm sure you all are not doing exactly a $250,000 purchase with 20% down. So to give you an idea of what that looks like on a per $100,000 basis, so that being a $200,000 loan, 1197.04 divided by 2 is $100,000. So per $100,000 borrowed right now, principal and interest is about $598.52, just under $600 per month, or for every $10,000 borrowed, we're at $59.86. And then just to give you an idea of the out-of-pocket, this is going to be a rougher number because property taxes vary quite a bit, and a lot of this is a good portion of this is the escrow to set up taxes, as well as homeowners insurance. So, but we're figuring about $62,000 is the out-of-pocket in this scenario. That's probably a high side estimate for most places in Michigan. Now I want to look at the weekly Freddie Mac survey to give you an idea of what rates are doing. So this is the average for last week. So they kind of went up, or sorry, for the week from last Thursday, so Friday until today. So they kind of went up and back down. The overall trend was up. So they did come down a hair today. Now, again, I always want to note that this is with points. This is almost a full point, 0.7 points. So in the loan scenario I just sent you, that would be a $1,400. 0.7 is 0.7% of the loan amount would be $1,400 in cost. So the true rate's going to be in the sixes on average. But just want to show you the trend. We were at, on Tuesday, we were at the highest we've been in 2 months on the interest rates. So not a great place to be. A lot of that has to do with the fact that there was some positive jobs data that came out, and inflation wasn't really slowing down. So we didn't have anything to a recession or fear of recession is going to be what brings rates down as investors put more money into the mortgage-backed security market. So hopefully the trend continues, because most experts think that it's only a matter of time. They don't know how fast it's going to happen, but a recession is probably in the future, in the not too distant future. So hopefully this is kind of a high point for us, and we're already starting to come down a little bit. But if you do have any questions, please don't hesitate to put comments in the show notes. If this was helpful, please like the video. If you want to see this, I'm going to do these at least every other week or weekly. Every Thursday is the goal. So subscribe to the video if you want to see more of these. And if you're looking to purchase a home in Michigan, I'm a mortgage brokerage in Michigan, can lend anywhere in the state. We have really great rates. Rates kind of stink in general right now, but mine are lower than most. So would love to throw my hat in the ring. All my contact information is in the video details. I hope you have a great day and a great rest of the week.